Interest on partners' drawings. So, partners are withdrawing the money or some kind of assets for their personal use from the business. That is drawings. For the drawings, they have to pay some interest to the firm. That is interest on partners' drawings. So, two kinds of drawings. One is drawings against capital, and second one is drawings against profit. Drawings against capital. A, B, C are partners. They are investing some money into the business. For example, A alone investing 5 lakh rupees into the business, and after a few months, A wanted to withdraw some money for his personal use from the business. So in this case, interest on capital will be reduced. For example, A invested rupees 5 lakh to the business as capital money, and he is getting 10 percentage on this 5 lakh as interest on capital, but he have invested that 5 lakh rupees on 1st April 2020. For example, only I am telling this problem. Then after few months, May, June, July, August, September and October month, the first date he wanted to withdraw rupees 1 lakh for his personal purpose. So till September 30 he will get interest on 5 lakh rupees as interest on capital. Then after that he withdraw 1 lakh from the business, right? In that scenario he will get only interest on capital for 4 lakhs, not for 5 lakhs for balance months, because he withdrawn some amount for his personal purpose. Before he invested that 5 lakh rupees to the business, now for his personal purpose he withdrawn the business money to his own purpose, right? In that sense, so these kind of problems falls under the category of drawings against capital. And drawings against profit, some business firm, we can predict their profit range. So in that sense, some part A, B, C are partners. So B is a partner. He wanted to withdraw some money for his personal purpose. That is, may be an emergency, or he wants some money immediately. So for that he is approaching the firm. If partnership deed is accepted, he have to pay some amount of interest on his drawings to the firm. So that drawings is before getting profit, before get assured profit in the business, that partner wants some money from the business for his personal use. So he is withdrawing that money, and that partner is liable to pay interest on that drawings amount. But we don't know what is that exact amount on profit amount. But he wants some amount from the profit as his share, and he wanted to withdraw earlier. In that sense, that is drawings against profit. And some more differences are there. I think you can understand better with the help of these drawings, the differences between interest on drawings against profit and against capital. Differences. First difference is where debited. Drawings against capital, it is debited to capital account. It is a drawings against capital, so it is debited to partners capital account. And drawings against profit, it is debited to drawings account. And part, it is, second difference is part, it is against capital, because it is drawings against capital, so it is against capital, and it's a part of capital money, right? And the drawings against profit wise, it is against expected profit. It is not attained profit, it is against expected profit. And the effect, definitely that drawings against capital will reduce capital amount, and drawings against profit does not reduce capital amount because it is on expected profit. And interest on drawings, it is not considered for calculating interest on drawings. Interest on drawings, it is not considered for calculating interest on drawings, because that it is affecting the capital in nature, capital amount. But drawings against profit is considered for calculating interest on drawings. you know Partnership deed, that partnership deed interest on drawings, if they have mentioned some percentages, that many percentages they have to pay to the firm. But here it will be calculated on interest on capital. The next difference is interest on capital. It is considered for calculating interest on capital. Interest on capital, as I told you already, A is a businessman, sorry, partner. He invested 5 lakh rupees, and till September he maintained his 5 lakh rupees, and September 30 or October 1st he wanted to withdraw money 1 lakh for his personal purpose. So in that sense 4 lakh only will be continuing. So he can get interest on capital only for 4 lakh, not for 5 lakh in that sense. And drawings against profit wise, it is not considered for calculating interest on capital, because it is not having relations with the interest on capital, because they are charging for expected profit on expected profit. So in that sense it is not considered for calculating interest on capital. Okay, where that interest on capital will be, interest on drawings will be entered first ever, it will be entered in credit side of profit and loss appropriation account. So interest on drawings account detailed to profit and loss appropriation account is the journal entry, and usually that interest is charged against capital in that sense. So it will be reducing that interest on capital, right? So journal entries for interest on drawings against profit are partners capital or current account. If it is fixed capital account, then partners current account, that interest on drawings will be debited, right? So partners capital or current account data to interest on drawings account, interest charged on drawings. So it is a journal entry. And transferring entry from partners, whatever the items will be entered in partners capital account, that will be transferred. So what is the item? It is that interest on drawings amount, it will be credited to profit and loss appropriation account. So profit and loss appropriation account credit, and that interest on drawings will be debited. And illustration 26 they given, Chavi and Neha were partners in a firm sharing profits and losses equally. Chavi withdrew a fixed amount at the beginning of each quarter. And here I wanted to share with you, so many alternatives are there, like beginning of each month, end of each month, mid of each month, and regular amount and irregular amount, beginning of each quarter, mid of each quarter, and end of each quarter. So about it we will discuss later. In this problem they have mentioned Chavi withdrew a fixed amount at the beginning of each quarter. Beginning of each quarter means 7.5 have to come. Interest on drawings is charged at 6% per annum. At the end of the year, interest on Chavi's drawings amounted to rupees 900. Here itself they have given it is 900 rupees at the end of the year. They have charged that interest on drawings, and they are asking us to prepare only journal entries for this interest on drawings 900 rupees, isn't it? So they didn't ask us to calculate. I will give you that clear cut information about beginning, mid, and end for each quarters, and beginning and mid and end for each and every month. Okay, and see the solution. Chavis capital account data to interest on drawings. So it is interest on drawings. Already they have given 900 rupees. So straightly we can enter. If it is the capital fixed capital account, it will be entered in current account. If it is the capital account, fluctuating capital account, it will be entered in partners capital account debit side. Right. So interest on drawings amount. See, interest on drawings. Interest on amount of drawings is charged on the amount of drawings from the date of withdrawal till the date end of the financial year. So when he withdrew that money from the business on his the drawing amount, on that amount some particular percentages will be calculated as interest. So till which date they will calculate that interest amount? Till end of that year, financial year. Accounting year, financial year, assessment year, all the years will be begins with April 1 to 31st March. And calculation of interest on drawings. Drawings by a partner may be broadly divided into irregular drawings and regular drawings. What is the meaning of irregular drawings? It means drawings of same amount or different amount at irregular intervals. Same amount or different amount, irregular intervals. That is irregular drawings. And regular drawings, it means drawings on same amount at regular intervals. Like beginning of each month, only 5,000 rupees. That partner A is withdrawing like this. Okay. Two methods are there for calculating interest on drawings. First method is product method, and second method is average period method. First method is product method. It is specially made for unequal amount withdrawn in unequal period. It's not a same period and uniform period, and amount also withdrawing 4,000, 5,000, 6,000 something, because it is an unequal amount may be withdrawn by a partner. So for in that sense they will use. In product method also two methods are there under this product method. One is simple method and another one is product method. Product method has two methods. One is simple method and another one is product method. Simple method, when that unequal amount is withdrawing, at the same time they are giving preferences for periods, how many months it is. So that amount into percentages, and if it is 8 months, 8 by 12. Likewise, they are giving importance for periods. For each and every amount will be calculated separately in simple method. And in product method, it is irrespective of that, collectively how much amount is withdrawn by a partner, that whole amount into that many percentages, how many percentages as per date have to give us an interest on drawings to the firm, that percentages, and they are multiplying with that. After that, for 1 month they are taking charge, that is product method it is. So two methods, one is product method and another one is average period method. First method, product method, is especially used for unequal amount, and average period method especially used for equal and uniform amount withdrawn by a partner. So in that, product method is subdivided to two parts. One is simple method and another one is product method. The simple method, they are giving importance only for the period when you have withdrawn, and till end of that year how many months in between. So they are calculating that. So it is for which one, simple method. And product method, collectively how much amount they have withdrawn, in that how many percentages as per date you have to charge, and for 1 month, 1 month how many, how much rupees he have to pay as an interest money. So these both are expressly made for irregular amount, unequal amount, right? So I will elaborate you with the help of one illustration. Illustration 27, calculation of interest on drawings by simple method and product method. In a partnership, partners are charged interest on drawings at 15% per annum during the year ended 31st March 2020. A partner withdrew as follows: date and amount they have given, and in the date column they given the date row. 1st May 2019, that partner withdrew 2000 rupees, and 1st August 5,000 rupees, 30th September 2000 rupees, 31st January 6,000 rupees, 31st March 2000 rupees. So irregular period, and amount also not same amount, 2000, 5,000, 2000, 6,000, 2000. So different amounts that partner is drawn. What is the interest on drawings? Interest is chargeable from the drawn amount to the partner. The partner has to pay to the firm how much amount he have to pay. See that solution, simple method they are following. 1st May he withdrew 2000, and from May to end of the month 31st March, 11 months are there, because they are giving importance for period. So 11 months, so 2000 into how many percentages they have given, 15 percentages as per partnership date. So 2000 into 15 by 100 into 11 by 12, that answer is 275, 275. He have to pay for 1 month drawing amount. Interest on drawings, he have to pay 275 rupees for that drawings alone. Which drawings, which amount he withdrawn on 1st May 2019, and many months are there, different amounts he have withdrawn. So especially how many months till end of that year, that month will be calculated, because here they are giving importance only for periods. So that particular amount withdrawn by a partner into the percentages which is allowed in partnership deed, and multiplied in that many months between we are drawn money, drawn date, and end of the year. So how many months in between, that will be calculated. And this is the simple method which is calculated for interest on drawings, irregular period, irrelevant amount and irregular period also. And product method, when drawings are made and unequal amounts, at different dates. Interest on drawings is calculated by product method as follows. See that illustration, and same illustration only they are calculating. He for withdrawn 1st May 2019, how much rupees? 2000 rupees, and between 11 months are there, but here they are not giving importance for that 11 months. So straightly they are multiplying with 2000 rupees. 2000 into 11 is equal to 22,000. So straightly they are and the next month followed by all the months will be multiplied by how many months remaining to the till end of the year. That months will be multiplied by with that amount withdrawn by the partner. That all the amount will be added finally. That 86,000 finally we are getting. So 86,000 into 15 by 100. Then for 1 month. For 1 month means 1 by 12. Then we comes to know that answer is 1075. Same answer. Here also 1075 rupees. There also 1075 rupees. So we can use as per our wishes which method we wanted to use. We can use both the method only for created to find out interest on drawings amount for irrelevant and unequal amounts. Irregular period and unequal amounts. And the second method is average period method. This method is especially used for regular drawings. The amount of drawings is uniform. Drawings amount 2000 has to withdrawn. The 2000 will be withdrawn by the partner in the beginning of each month. Over each and every month, that partner has to withdraw the 2000 rupees only, not 3000, not 4000 and all. At the same time, not 15th, not 12th, not 16th, and not end of the month. So beginning of the month only that partner has to withdraw that money. If he is differing, that amount is differing, else the date is differing. So in that sense, we have to follow that first method only. Okay, in this average period method, that amount of drawings is uniform and the time interval between two drawings would be same. If time interval is differing, in that sense also we have to prepare the first method, that is product method. And if amount is withdrawing, in that sense also we have to refer first method, not second method. Second method widely we are using at present. And already while I teach you, I said about interest on drawings, beginning of each month, mid of each month, and end of each month, beginning of each quarter, mid of each quarter, and end of each quarter. So in that sense, it is an average method that you know. So depends upon the situation they have measured. You can see this screenshot. For average period method, we have some formulas. One is interest on drawings, the total drawings, how much we have withdrawn from the firm, and the rate of interest divided by 100, and average period. For calculating average period, you know what's the meaning of average? Beginning plus end divided by 2, that is an average. Like this here also, month left after first drawings plus months left after last drawings divided by 2. And you could understand better while I am teaching you that illustration that time. Now you can see there are three situations. First situation, that same amount is withdrawn by a partner in the beginning of each month. In that sense, 6.5 months it will be calculated. And how this 6.5 comes? 13 by 2 is equal to 6.5. You know that. And by chance, if same amount is withdrawn by a partner in the mid of each month. So in that sense, 12 by 2 is equal to 6 months will be calculated. And if it is end of each month, 11 by 2 is equal to 5.5 months it will be calculated. And for your better understanding, I will add this screenshot also. You can refer the formula and how they are calculating these all the months you can see. I just enclose the illustration 28 for your better understanding, which is calculated interest on drawings. And you can practice at your home. If you are having any doubt, you can post in comments. Thank you.